have invited me on your show, and I hope we can provide some information or guidance to the listeners or the viewers.
Okay, Joseph. Well, I want to introduce you. I have spoken to Joseph before. It's been a while, and Joseph Parnes runs a family office. He's very involved in a group of family offices. I saw a video where you were addressing, what's the name of that group, Joseph? And welcome to TradeGATEHub.
Honestly, there's so many of them, I don't really recall. The family offices of basically DC, from Palm Beach,
Okay.
from various sections of the country.
Okay. So, Joseph, I know that when I talk about the early stages of my career to a lot of traders of this generation or so, it's a history lesson. So I know, when you go all the way back, why don't you start with, how did you get involved in the financial markets? For example, what was your first job and how did you grow interested in riding the waves of markets, not just on the upside, but on the downside?
All right. Briefly speaking, I immigrated to the United States at my high school times. In other words, when I finished high school, I applied for a student visa into this country. And most of it is because that I lost my parents when I was 10 or 11 years old. And I pursued my educations into engineering first. And slowly, when I got the degree from there, I sort of provided, or at least I traveled to different parts of the country for a job. Eventually, I ended up in New York working for Western Electric. And during that time, I was fascinated by the stock market, which was very close to my proximity of the office. And I slowly educated myself into going into the stock market as a whole, or in a trading fashion. I finally managed to secure my Security Exchange Commission, the SEC license at that time. And I developed a market letter called Shortex. This was during the era time of the Vietnam War. And what they called 3 I's at that time: inflation, interest rates, Israel. And the kind of the market letter that I had was called Shortex and was specifically selecting 6 stocks to short. Then slowly I got a sort of notoriety, and I developed it into 7 stocks long and 7 stocks short. And I slowly veered into managing the individual's money. And this was at the era of the 79 that I formed the company. And slowly, I, of course, developed it into what it is today.
Could I interject? You engineers, when I was a broker, were always great prospects. There was something about someone with an engineering background that they really took to technical analysis and charting. Was it like that for you? Having been an engineer, you loved charts and cycles and all things technical.
That's correct. In other words, I really used the basis of the probabilities and all other knowledge that I earned from the engineering into developing a model that helped me out to develop a discipline to manage portfolios, sort of the hedge accounts with a portion of it being insured. And I developed, as time went by, I called it the short selling for the long term. In other words, the type of the short selling that I did or I do is quite different than the average traders do. Most of them, they rely in points 1 or 2, maybe 10 to make a profit and get out. But mine was, strictly speaking, was developed like about 20% of the value of the portfolios I devoted to the short selling of the big cap companies and would hold it for a long time, meaning it could go on 1 year, 2 years, or 3 years. The proceeds that I got from that short, I reapplied it or diverted into the long-term positions of the stocks that I thought would be able to sustain any hiccups or any malfeasance of the market in coming months. So as the long side developed to increase in assets value, I would maintain the short positions. However, if I saw there was some problems like today, then of course I would have a hedge against the portfolio to a point that I wouldn't have to spend money or worthless money to buy contracts or the protection calls, which many of them will go
Okay.
worthless.
I'd like to acknowledge that, I don't know, I'd say it's well over a month ago, that Eric sent me a copy of ShortX. And one of the positions I noticed was you were short Russia way before the war. And what a brilliant historical call. Was it all technical, or did it have something to do with your belief and knowledge of geopolitics? Was it a combination or strictly your system that had you short Russia? What was it that compelled you to take that trade?
I think your second motion is correct. It was a combination of both. The background that I had developed through all these years, being in Europe many times, and also the country that I came from, had given me a discipline of ideas of what that particular country will do. And so that really helped me in my decision making to discipline my clients that this would be a long phase to come. And that's the reason why I started shorting some of the stocks that I thought would have a difficult times, or at least a bad effect, because of the Russian diplomacy.
Okay. So how do you take profits on shorts now with the market closed? They haven't really been trading, even the ETFs, I believe. Is that correct? So everyone's frozen out of the market. Have you ever seen anything like this, or unprecedented?
Yes, I think very much if you go back in histories, the era of the 73s were not much different, but there is a relative. Then we didn't have the numbers of the brokerage firms or exchanges, or we didn't have the ETFs at that time. But the nature of the movement of the market are very much similar. Then we had it in the 20s and 79 and in the 99s. And of course, we had the 2011 effect, and we had the Afghanistan's problem. You're always going to have this kind of the hiccup. But I have to admit that the percentage of the drops and the height and going up are quite dramatic at this time. I just wanted to a little bit interject that the market's behavior today is quite different. The entrants into the market are able to trade throughout the world with many exchanges available, which they were not available at that time.
Okay, so let me ask you this. You're a student of market history, and you brought up inflation, interest rates, and Israel. Yeah. And now is it inflation, interest rates, and Russia.
That's correct.
And a lot of people are drawing parallels to the period of 1970. I think that this is the 1970s on steroids, that 1970 in a way looks quite tame with all the leverage we have, and the economy possibly slowing, and most likely will, with oil prices, and the Fed tightening is going to have to tighten at the same time. We couldn't handle a Volcker type of liquidation break that would cause every market to collapse. So have you ever seen an environment like this after parabolic moves in stocks to the upside for so long? And when you and I started, the Fed wasn't as much of a factor, and central planning didn't play as big a role in the markets. What do you think of this environment, Joe?
Well, you said it very well. Of course, don't forget, in the eras of the 70s and even into the 80s, we didn't have the structurals of ETF in a style. And we
Okay.
didn't have the internet as we see it today. Today, the trading departments of big brokerage firms, institutions, high frequency traders, they have availability of doing things to the market that I had sort of phrased it in my latest market letter as two effects that I think is doing the market really harm and sometimes enthusiastically on the upside. And I call them snooping, spoofing, and of course, scalping. And this is going on in much stronger fashion that we have ever had before. Spoofing, of course, means when those traders they can fake orders and they send it through. And of course, the scalping is when the short sellers in a hole, they cash in their trades, their positions without disclosing it. In a nutshell, is a naked short selling. And these things are vehemently stronger and much more equipment in the hands of the high frequency traders to do than we had in the era of the 70s and the 80s.
Yeah, we didn't have dark pools, right? Is that where they're executing their trades, Joe?
That's correct.
Okay, so there are some people that follow dark pool movements. Do you pay attention to that?
Well, we pay attention to the movement of the markets with the data that we can tabulate from them. We don't know who's doing it, but we know that the action is happening.
Okay, so I want to get back to your book because you described what most people think about short selling, and to me, long term for me is like a month. Okay, that's like for you probably a 2-3 year hold. So tell us your methodology, and the book was published by Wiley in 2020. I recommend that people pick it up if they're interested in how you short sell for the long term.
That's correct. I stay away from shorting for the viewpoints of making 2 points or 3 points, or the thin companies, meaning the small companies that could be acquired or could be subject to the squeeze. Most of the short selling that we do for the long term are big capitalized companies, and I can just name them with a few, which is general financials, Citigroups, Bank of America, and things in that line that we feel is not going to be taken over, that the amount of the float is enormous, that there would be no short squeeze, but the nature of their earnings power is kind of a potential for higher prices is limited, or at least if they can go up, they won't be able subject to the spoofing. Like you saw, for example, yesterday on Amazon, or actually is effective today, that Amazon all of a sudden the short sellers have to recover, and here it is up 200 points. So normally we try to select capitalized company that have very short earnings power or growth power, that they don't go up too much and they don't go down too much, and they're not being acquired. And again, remember, our aim is not to make that much money on the shorts, rather to make money on the diverting the proceeds to the likes of like Amazon.com or Google's or high caliber growth companies that can sustain their earning power through all the dilemma and the problems that we have right now.
Okay, so you use short selling as a source of funds to build on your long-term long ideas.
That's correct.
I'm reading that correctly?
That's
okay.
correct.
Okay,
and
so
of course also a hedge for the time like this. Right now, if you look in the pattern of the financials that I just indicated, most of them are vehemently down. So therefore, you have a portion of the portfolio making or stabilizing it by being down on those particular stocks.
Okay, so when you look at the XLF right here, would you say that you have a long-term bullish viewpoint? Do you believe that we're in a topping phase for the financials? And do you believe that yields are the most important part, the movement of yields, the most important part of driving prices up or down in the banks?
Well, the financials as a whole are much stronger today than they were in 2008. But there are
Yeah.
hiccups in their format, in their chart pattern, if you look at it. Now, and generally speaking, for the market, you just indicated S&P 500. But I
Okay.
base the earnings of these companies and the multiples assigned to it. So if I take, for example, S&P 500, they're earning close to $210, and I adjust to it a PE ratio of 22, I could see that the S&P could visit 4,730 in coming months. In coming months could be 5 months, could be 3 months, could be 6 months. Now I applied the same technique on Dow Jones averages consisting of 30 companies, weighted earnings of almost 1,790, and I apply a 22 earnings, 22 PE ratio, I guess it. So I could at least see that could reach to 39,380.
New all-time high there, Joe.
That's correct. That's
Okay.
barely a time that could be affected right now with the Russian conflict, because the Russian conflict, as you see it, has applied by the government here and also elsewhere a sanction on these the companies that are involved, and financials are very much involved with Russia and the likes. So I see problems for the financials at this time. I can't tell you how much the problem will linger on it, but even the benefit that they're going to get from the increase of the interest rates, it will be subsided with the problem with the Russians, with the sanctions, and only time will tell the charges that they have to make against their earnings.
Yeah, we don't know yet, do we? But there are a lot of mainly European banks, probably more exposure to Russia than U.S. banks.
I think you are correct, but especially England, and that is correct. But many of financials that we have here, they have already branched out, and they very much are involved the same situation at the Asian markets. The likes of the Hong Kong or Singapore or Tokyo, and also some Asian banks as a whole. So, but right now, most of the financials in this country are intermingled with the global financial networks.
Derivatives, AKA derivatives on the books that they never handled in Europe as well. Let me ask you this, Joe. I mean, the hottest markets have been commodities, and that's why we have inflation and interest rates, and we've had major moves for quite some time after crude went negative on COVID. We got to 130 after the invasion. What's your take on commodities? Do you think that they're a little bit crowded now and due for some type of respite? Or long term, would you be looking for buying opportunities on weakness in those groups, particularly gold?
The commodities exchanges are really very volatile. It's not very good for the ideas of average investors as such. I would hold off on this situation of the surge, because most of these surge are done by the houses that are taking the benefit of the Russian and of course the sanctions that has been put on Russia. So I would kind of say right now, the traders is a heaven for them right now, because they can all, God knows what they do with the contracts that they have to sell. For example, just the oil alone, the airlines have to always buy contracts in the distance in order to be able to hedge with the price movement that they have. So it's very difficult for average investors to get involved. I just leave it to the hands of the big brokerage firms who deal daily with the utmost of their buying of the contracts, and they are much more savvier than we are, because they have the equipment and they have the know-how than the average investors would.
Does a dollar and your view on it come into play in your thinking of markets?
I'm sorry, I didn't understand the first.
Does the dollar, the US dollar, and currencies come into play in your analysis of sectors, global? Does the dollar matter in your analysis?
Well, absolutely. I think right now we can see it from the market point of view that the dollar is strengthened quite strongly than, let's say, it was in 2008 when we had a problem, financial problems. Right now is the kings of the thing, and you can see it, what it's doing to ruble, the Russian model style, the Russian ruble. Yeah, that's why they're not opening up the exchanges. Exactly, right. Because they know that the drop will be dramatic and that there would be no sinking. And that is a very, very strong point of view, that the dollar importance is enormous in our calculations of what would become of especially the financial market.
Okay, well, let me ask you this. When nations around the world, and many are not happy that the US dollar is the reserve currency, specifically China would like to have more of a role in that. When they see that the US government can just freeze your assets and you not have access to them, do you think that could be a threat to dollar supremacy, because people aren't going to trust the SWIFT system and the fact that the US could do these draconian things to their assets?
Very, very good questions. But I only go back to the relevance of the dollar's strength in 2008. When the 2008, they were trashing the dollars, and eventually they were all going to euro or some other functions, Swiss francs and things in that line. But the dollar is still strengthened in its own ways, even with today's new entrance of different tools. You didn't have the cryptocurrency, you didn't have the Bitcoin that you do have right now. And even right now that there is a pressure on the other currencies, the dollar is standing firm, and the dollar is showing that you cannot replace it. Now, you may do temporarily adjustment as you're doing it right now with the cryptocurrencies, but the average traders, and especially those big houses that they trade nothing but commodities, financial being one, they realize liquidity of the dollar is number one, and they cannot replace it. Even the Chinese effort of the yuan to come into the market, it will all be temporary. The dollar stands firm because of the strength of the economy of the United States.
What about the relations between the US and Saudi Arabia? They're not the same with this new administration. What would happen if Saudi said they would accept payments for oil in other currencies besides the dollar?
Saudi Arabia, of course, is flush with money. They probably could say something like that with the intent of another adjustments or concessions coming in from, let's say, China or things with regard to their improvements. But if those things happens, in my judgment, I think it's going to be temporary, because most of them, they have enough money, especially Saudi Arabia, that they are well diversified in other currencies in their coffer, that I don't think that their actions will have that much of a longer effect than the average investors would think.
Okay, why don't we wrap with the Fed? They meet next week, Joe. With what's happened, oil has come off quite a bit in 2 days. What do you think they're going to do? And do you agree that they should be on a tightening path, and that the U.S. economy could handle it and the market could handle it? Maybe the economy could handle it better than the market.
Well, I think you're correct. Right now is a dilemma, because right now, as the oil prices shoot up as it has, that itself is an element of the inflations. So in a nutshell, they're really behind the rock, so to speak. This morning, you saw that the consumer price index came out.
Yeah.
It was very much, it's really a laggard indicator, because you don't know what's going to happen with the price of the oil being shown up in next month. But even that, the Federal Reserve is going to see a strong economy in certain ways. And then you have the dilemma of the high price of the oil and other commodities as well. So they may be forced not to increase or be hawkish as we would like them to be. But I normally think of it very much dramatic, very much politically speaking. that the Federal Reserve is an entity that is independent and probably receives information and advice from perhaps 550 or 500 economists. And as you know, if you put the 10 economists in one room, they all,
Yeah.
or 50 economists in one room, they all will have different point of view.
On one hand or on the other hand.
That's right. That's right. But I think Federal Reserve is got a stronger tool to act independently. So I can't really predict what they will do. All I know that they have a better tools in hands to manage the interest rates and inflations in coming months.
Okay, Joe, I have the crew chart up here, and I know you're a technician. Does this look like we could be developing a right shoulder here for a head and shoulders top?
Very, 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 very strongly, I think you're correct.
You know what that measures? If we take it out, measures $80. $80 crude, that'd be a nice present for Joe Biden to take it back down here.
Yeah, well, that's the decision making over here. I don't like to be too much. Actually, I tell to my clients two subjects I don't discuss. One is political, one is religion, and
Okay.
because
Right.
you really don't know what the effect of this decision will be. But again, the government makes a decision, and if they're smart enough, and I think Biden's and their colleagues will be smart enough, if they have made a mistake, they should correct it as we go forward.
Well, the effect of having you here certainly was edifying to our community. I want to thank you. You do have a newsletter that people could subscribe to. Is that correct?
That's correct.
Okay. And so all you have to do is go to technomartrga.com. And is this your ShortX letter?
Shortex.com as well.
Shortex.com to get that and be aware of what Joe is thinking. Joe, I'm so glad we reconnected. I had a great time talking to you, and I know you make it easy for someone who interviews someone because I could ask you anything. Appreciate it.
Thank
Joseph,
you very much. Thank you for having me
Joseph
on.
Parnes, everybody. And you can follow him on Twitter as well at Joseph_Parnes. Thank you, Joe.
Thank you.
Good hunting, my friend.
Thank you. Same to you.
Adios.
Adios.
Hope everyone enjoyed. Have a great weekend. We'll see you next week. Adios.
Thank you.
You're very welcome. Thank you, Joe.